There he is. Chris, how are
Hey,
you?
hey, Jimmy, I'm doing well. How are you?
Excellent.
Awesome. Well, Jimmy, Andy, thanks for putting us on again. Glad to be back. Continue our relationship with your organization. Today, I'm going to talk a little bit about our company. I'm going to talk a little bit about agriculture, why we think it's a compelling investment, and a little bit about the specific verticals that we offer at Harvest Returns. So we were established in 2016 here in Fort Worth, Texas. My background, I'm a 30-year retired Navy officer. My co-founder, Austin Manis, Army combat veteran. The rest of my team, I've got experience in commercial real estate, technology. The rest of my team has private equity background, agriculture, of course, accounting, pretty experienced team. And essentially what we do is provide a platform for people to invest in private placement agriculture offerings. We do Regulation D, 506, C, and B. So as Jimmy noted earlier, this is primarily for accredited investors, but we also have room for limited amounts of unaccredited investors in certain offerings. We like to keep our offering minimums fairly low. We know that a lot of people haven't ever invested in agriculture before. This is a new asset class. So that gives them the opportunity to kind of test the waters and then diversify their portfolio with several smaller investments rather than a single large one. You know, our sort of track record is we've funded about 45 companies since we started, raised about $30 million, and we've had several exits and distributed over $6 million, both in distributions and in exits from deals. Talking about agriculture and how it's changing, well, the main thing that's driving changes in agriculture today are consumer preferences in what they eat. And this is actually a pretty new sort of phenomena. In the past 10, 15 years, there has been a strong fragmentation in the food sector, and people's diets have become increasingly fragmented. I'm talking, of course, primarily in Western countries, United States in particular, but people are demanding very specific types of food, and that includes the way it's produced. So whether that's organic, locally produced, plant-based protein, regenerative protein. I'm going to talk a little bit about some of these and how you can potentially get some exposure in your portfolio from our offerings. And so because of this, agriculture is having to rapidly adapt. The last time there was a major change in agriculture production in the United States was really 1950s. That was when the addition of large amounts of chemicals, pesticides, herbicides, chemical fertilizers caused agriculture to become very large scale production. So the farms that could get bigger and bigger took advantage of this. You know, of course, there was negative consequences of this, and we've seen some of that in the environment. And so because of that, people and these consumer demands, the way that food is grown is being produced. So at the same time, everybody has seen in the past 3 years, certainly disruptions to the agriculture supply chain. So we're still seeing some lingering effects from COVID and what that did to transportation. Of course, energy prices as of late have contributed to stressing ag supply chains, railroad strikes on the horizon, and of course the war in Russia, in Ukraine with Russia has certainly impacted the grain exports out of that country. And although that has raised some of the grain prices in the U.S., and we're seeing some of that, it's mostly impacting developing nations in North Africa and also in Europe. So at the same time, anybody that's been to the grocery store lately has seen that sort of food has borne a disproportionate amount of that inflation, the inflationary impact that we're seeing all across all sectors. And you know, the panelists earlier talked about food disinflation, or not food disinflation, but disinflation writ large, and that we can expect that next year. I think food sector will see some of that, but not as much. Number one, food is not discretionary. There are still high. There's also a lag factor in food, and you know, the food that we're going to eat next year in some cases is produced this year. So we're going to see continued high food production, and some of that is due to energy, and some of that is due to the fertilizer disruptions coming out of Russia. So the input prices for farmers are high. So why should you invest in agriculture? Agriculture is a pretty wide field. We just saw Josh's presentation on coffee, which is, a great product, but it's a much broader area than that. First of all, demographics. So the population continues to grow. As population continues to grow, and it increases in wealth, and people, populations that have more disposable income are going to increase the amount of protein and or calories they consume. So there's some estimates that say over the next 30 years, we're going to have to produce as much food as mankind has produced in the last 10,000. So just the overall demographics of food as a industry segment will continue to expand. Secondly, returns. So the little graph I've got up here specific to farmland and people who have invested in farmland, that piece of this sector have done very well in the past couple of years, and actually historically they've done very well. And our investments, some of them are very land-based and others are not, but they're all exposure to ag. Non-correlated diversification. Agriculture is generally not correlated. The returns there are not correlated to stock and fixed income bond markets. And a final reason you might want to consider getting some exposure to agriculture in your portfolios is to improve the food system. And we'll talk about that a little bit. So we have several verticals at Harvest Returns that are unique. They're really one, if not one of the few places that you can invest in some of these verticals as a retail investor, small scale, not an institution. The first of these is controlled environment agriculture, indoor agriculture. So what the demand that's driving this is a couple of things. One is those supply chain disruptions. We saw most of the leafy greens that are consumed in the United States, fruits and vegetables for that matter, are grown in Central or Salinas Valley, California. Of course, there's water shortages in California and the Western United States that continue to impact those supply chains and that food production. But the other thing that's driving this is the need to reduce food miles, or the desire to eat food is traceable. And so growing food indoors allows for year-round production, whether that's in a small urban vertical farm in an urban area. And we've got several of those that we've invested in Alabama and Texas and Omaha, Nebraska, or large scale greenhouses. And we've done some of those investments as you see here on this these pictures. The market is continuing to grow, and so we can, although there's been some recent fallout, some of the larger companies are laying off employees. There's still a lot of traction in this space, and we anticipate we'll see more of these offerings in the future in 2023. The second I'd call kind of a contrarian opinion. This is one of the only places that you can invest in actual beef and livestock production. So this is another industry you've seen a lot of interest from venture capitalists in alternative proteins, specifically plant-based proteins. And we've also seen in the past year or so that all the revenue grew during COVID of those products. It's falling significantly now, and those companies are losing a lot of money. So our contrarian opinion is that consumers are going to turn more towards regenerative livestock. And when I say regenerative, that means different things to different people, but primarily it means that you're taking livestock and grazing them in a manner such that it's improving the quality of the soil. It's improving the water retention of the soil, less runoff, no use of pesticides or herbicides. These farms are generally organic. Farms and ranches are generally organic. And moreover, they can be carbon negative. So you're actually sinking carbon in the soil because of the actions of the animals related to the soil. So this market is growing. Specific to the US, most of the grass-fed products are imported. So there's a lot of room for the domestic market to grow. We've done some debt and equity deals in the grass-fed market, and they've done very well for our investors. So we like this space. Finally, something that we started to do about a year and a half ago, and it's done pretty well for us, is investments in early stage agriculture technology companies. So obviously these are a bet on a startup company, higher risk, higher return potential. They're the things that are driving agriculture technology, and ag is a very conservative industry, but the things that are driving this is the the need for farmers to make a stronger profit and the need to reduce the environmental impact of growing larger amounts of food over smaller land areas. So there's different flavors of technology that are in the ag space, and we've done a couple of investments on all of these. One is precision ag. So this is like the drone that surveys the fields. It's sensors in the soil, moisture sensors, things like that. There's a biotechnology component of agriculture. And then there's also automation and robotics. We recently completed a robotics, essentially automated tractor investment offering. And we've had some of, although we've only done a handful of companies in the space, sort of pre-seed round investments. A couple of these companies have already completed subsequent rounds at higher valuations. So we're pretty happy with that. The other, I didn't cover it here, but we do have a specialty ag vertical, and we've done things like, I'll let you see that. So we've done recently completed a vineyard offering here in Texas. We've done mushrooms. We've done aquaculture. We've done any number of sort of specialty crops. The one sort of thing you probably won't find at harvest returns is row crops. These are commodity-based crops, primarily soybean, corn. There's other places to invest in that if you want exposure in your portfolio to those sorts of crops, but we don't. We're more of the specialty time. So got plenty of time for Q&A, and I want to give you all a chance to ask them. Excuse me. So I'll get to that. The screenshot on the right shows our platform, and we've got some questions coming in. Jimmy, if you want, I'll just start asking them or answering them, if that's okay.
Yeah, go ahead, or I can pose them to you.
Yeah, go ahead.
Up to you. Okay, I'll pose them to you. So first question that came in, how many deals do you typically offer in a year?
Yeah, so generally we launch 1 to 2 offerings per month, sometimes fewer, sometimes 2 or 3, but that's about our average. So plenty of chances to wait and see and wait for that offering that you want in that sector that you want. Good.
And do you run a fund, a diversified fund, or are all the investments made a la carte by individual investors? What does it look like for a typical investor who comes into your platform?
Yeah, good question. So currently we are doing a la carte investments. You've seen some of them. We do 1 or 2 a month, but we are working on a fund that we intend to launch for 2023. So obviously this will be a more traditionally scheduled fund. The nice thing about the kind of structure that we built is we've got a great deal pipeline of all the, every single month we get maybe 20, 25 deals that come across our desk, and only about 3% of those or so actually end up on the platform. So because of that, we've decided that, we do want to see some of those economies that you might get running a fund, and we're still working on the thematics of that fund, but it's going to be very similar to what the type of offerings you see on the platform, and a bias towards sustainability and impact in future, sort of companies that are really focused on keeping American farmers farming and doing it in a way that benefits the land and produces quality food.
Yeah, I think that'd be phenomenal if you guys were to offer your own fund at some point next year or at some point down the road. Maybe probably offer a handful of funds, maybe one focused on ag tech, one focused on sustainable farming, one focused on livestock. I'm just spitballing here, but I think that'd be interesting if you guys do something like that.
We're definitely looking in that direction.
Very good. Well, we'll keep an eye out for that. Let's see. Our next question comes in. What's your process for vetting deals on your site? I agree with much of your thesis, but I think I would struggle to do due diligence.
Yeah. So what happens is, that pipeline comes to us, a farmer or an ag company will come to us, and first thing we're going to do is just take a look at what they're trying to raise, for what their business plan is, their experience. That's sort of the first swag. Once we decide that we want to pursue due diligence on these companies, and we kind of come to a mutual agreement on that, we will dig into the founders' backgrounds. So we'll do, typical bad actor checks on the security side and the criminal, bankruptcy, all those sorts of things. We're going to dig into the pro forma financials. We're going to look at make sure that they're the structure that they're offering makes sense, is appealing to the investors and executable. And then we're going to go, typical. We're going to look at their lease agreements and their offtake agreements and their corporate documents and all that sort of things. We've got a pretty good due diligence team now. Really happy with it. We've got the process down to about 30 days, so we're able to do that with some certainty and some deliberation.
Good. Bob asks, do you operate the greenhouses?
We are not an operator in any of these companies. That's hence the due diligence process. So the companies come to us and they decide how they're going to operate. We have essentially we have a passive investment in these, although if we do a fund, we'll have a more traditional sort of voting rights with the relationships with the companies that are in that portfolio.
Good. Let's see. Question here from Alan. Alan asks, what are the trends in terms of organic food, both in terms of production and what the end consumer is looking for?
So, organic, if you go by any grocery market, you're going to see organic food there is going to have a price premium, and the premium relative to conventionally grown foods, depends upon crop, season, any number of factors. So that it is something that consumers see are demanding a lot. USDA in the United States is who certifies organic farms. So there's a lot of questionable labeling in food, as many of you know or suspect. Things like naturally raised, that's just a label that doesn't mean anything. USDA organic means that the USDA has actually certified that farm or ranch.
All right, next question. This is a great question that I think all of our presenters today should be asked. Do you or your team, Chris, personally invest in any of these deals?
Yes. As a matter of fact, I just invested in our current offering. So, and so our team has, and some of our families have. So, the company usually doesn't. We're not set up as an investment company. So for the most part, Harvest Returns does not invest, but and that may be different for the fund as we launch the fund. But in these individual offerings, yeah, we do invest in. I'd say probably 70% of them have one of our company members investing in them.
Very good. It's always good to see. Scott asks, you mentioned mushrooms. Do any of your mushroom work focus on medical uses? And then he gives an example of turkey tail fungus and cancer being used as cancer treatment.
So, interesting question, Scott. We did do a mushroom company a few months ago, and theirs is more on creating sort of a circular economy between food waste and then producing, buying food from restaurants and then selling mushrooms back to those same restaurants and then reusing the blocks as compost. We are in early due diligence with another mushroom company that's looking at some additional uses. So yes, we see it all.
I learned something new. I had no idea. So let's see. Next question is about supply chain. This questioner asks, has ongoing supply chain disruption impacted ag companies negatively from what you've seen? How have they navigated these challenges? And is there any ongoing risk?
So COVID obviously had a big impact, the early part of COVID on some of our portfolio companies, especially those that were selling retail, that some of them, some parts of the country, those sales became very challenging. But for the most part, food remained an essential industry. It's not discretionary. People are going to eat. Supply chains, there are risks in every investment, and these are no different. And part of that with agriculture is biological, so weather, disease, drought, those sorts of things, and commodity risk. Although most of the companies that we invest in are sort of shielded from the commodity risk, but supply chain risk is certainly a thing. But I think we're going to see that lessening more as time goes on.
Let's hope so, right? Patrick asks, Chris, average size. What is the average size investment in an early stage ag tech deal? And is there any interest in bio waste management for farmers or ranchers?
Our average size investment is $500,000 in the ag tech deals we've done. Of course, the minimums, for the individual investor are smaller, anywhere between $10,000 and $25,000. The bio waste, I'm not sure I can answer that question, but we could certainly, keep an eye out for that.
Yeah, maybe you could reach out to Chris directly there.
Yeah.
Next question says, I didn't quite follow the pivot away from meat alternatives, including Beyond and others like it, to a new type of food or technology. Could you repeat that part?
So the pivot is not necessarily a pivot away. Well, the proof is in the earnings of these companies and the stock price. I think since they've gone public, they've all gone down. And I'm specifically talking about Beyond Meats and Impossible Burger. There was some, a lot of investment from VCs into those spaces, but not as much interest from the consumer side. And it really hasn't panned out from, both the nutritional value purported of these foods and also, in my opinion, in the environmental sustainability of these highly processed foods with really large diverse food chains, the plant-based meat. So, our pivot is not necessarily a pivot. It's a return back to the past of growing animals in a sustainable animal-based protein in a sustainable way, but at more scale. And the way we do that is through some alternative funding that we do with these companies.
Very good. We've got time for 2 or 3 more questions. Okay. And then we'll cut you loose. Chris, Amy asks, what are the upfront loads on your investment?
No upfront loads for investors. We take our fees from the sponsors, and then we take a split, generally a 20% carry. So if the deal performs, that's where we really make our money towards after the deal exits or during distributions.
Yeah. What's the typical hurdle on that 80-20?
We have some that have pref returns. I'm trying to think of one recent one, it's like an 8 to 10%. And then on the debt, we've done, what I consider high yield debt, anywhere between 7 and 15% on the debt deals.
Pretty typical then. Richard asks, do you work with investment advisors?
We do. So, give us a call. We'll have a conversation. And same with IRAs, self-directed IRAs.
Good. We've got time for one more question, and then we'll wrap things up. Last question asks, are your companies existing companies or are some of them startups?
Both. Obviously, the ag tech companies are pretty early stage, anywhere between 1 to 5 years. Some of the companies that we invest in have been around for decades, honestly, some of the cattle operators.
Okay, fantastic. Well, Chris, thanks again for partnering with us on Alts Expo. You were here last year. You liked it so much. You came back again this year, and we hope to do 1 or 2 more of these events in 2023. But really appreciate you being here with us today for Alts Expo 2022. Thank you so much.
Thanks, Jimmy. Bye.